Hi guys, today we're starting with Module 7 on tangible assets or fixed assets. Most of this work you've already done last year when we did asset disposal. So we're just going to do some quick revision and then we're going to go into some questions which are more suitable for this year regarding analysis of these accounts. If you're uncomfortable with this work, please go back into your notes for last year and work through some of those questions again. The first question we're going to do is task 7.1, which is revision of last year's work. So this is a good question for us to start off with. Okay, so in this question, we're doing ledger accounts and we're also doing note 3 to the balance sheet. Note 3, we've already done quite a bit of it. We did our financial statements as well as the cash flow statements. Okay, so this is just pure revision on asset disposal and purchases of assets and note 3. Okay, so we've been given some balances but before we put in the balances, we're going to look at the additional information to see what is happening in the additional information. So the first one is about the equipment. It says additional equipment was bought on 31st August 20.2 for 40,000 and has been recorded. So that tells us that the equipment amount in the balances, which is 174,000, includes the 40,000 new equipment. So we can go to the equipment account. Remember, equipment is an asset, so the balance is brought down on the debit side. Balance is brought down on the debit side. Okay, this new equipment was bought on 31st August. Okay, at a cost price of 40,000 rand. Now I said that the 174,000 includes the 40,000. So that means the 174,000 is not the balance brought down, but it is actually the balance carried down. Okay, so 174,000. Okay, and we're going to basically work backwards to find the balance brought down. Okay, so we'll put in 174,000 on both sides. Okay, and work out the balance brought down, which is 134,000. Okay, and then all that's left to do is bring down the balance on March the 1st again. Okay, which will be 174,000. Okay, and that's it for the equipment account. Okay, obviously our depreciation calculations will be affected by this here. Okay, then the next thing, number 2, an additional storeroom was built during the year for 120,000, but was inadvertently entered under repairs in the general ledger. Okay, so we are not doing ledger accounts for land and buildings and all of that, so we're not going to worry about it right now. Okay, but what we can do is we can do our note 3 already. Okay, so additional storeroom was built during the year for 120,000. Okay, it was entered under repairs, so those adjustments will be made if you're doing the financial statements. But we're just going to put it in as additions for land and buildings. Okay, additions at cost price for land and buildings. It wasn't recorded in the land and buildings, it was recorded under repairs. So the land and buildings amount that's been given to you in the question is actually your cost price at the beginning of the year. Okay, and we can actually finish off the land and buildings. Okay, so 1,080,000, the movements 120,000. Okay, and then the cost price at the end of the year will be 1,080,000 plus 120,000. That will give us the carrying value at the end of the year, 1.2 million. Okay, so land and buildings is done. Okay, not much to it. Okay, the next thing, a vehicle was sold on 31st December, but no entry has been put through. Details of the vehicle sold are all of these details. Again, we're going to depreciate all vehicles at 20% on cost and equipment at 15% per annum on the diminishing balance method. Okay, so because there's some asset disposal involved with the vehicles, we can finish off our equipment. Okay, now with equipment, if we look back at the ledger account or even at the question, the balance brought down was 134,000. So that's going to be our cost price at the beginning of the year. Okay, the additions we know were 40,000, the amount you put on the debit side of the ledger account. The accumulated depreciation given to you in the balances for equipment was 42,000. Remember, you must always put that in brackets. And that will give you can calculate your carrying value at the beginning of the year. 134,000 minus 42,000. Okay, we now need to calculate depreciation, so we're going to calculate that. Okay, so we have to calculate depreciation separately for the old equipment and for the new equipment. Equipment depreciation is calculated at 15% per annum on the diminishing balance. Diminishing balance means you need cost minus accumulated depreciation and multiply your answer by 15%. So for the old equipment, we know what the carrying value is. Cost minus accumulated depreciation, 92,000. So we're just going to say 92,000 times 15%. Okay, to give us our answer. For the new equipment, the cost price is 40,000. There is no accumulated depreciation on it. We're going to multiply it by 15% and we're going to multiply it by 6 months over 12 months. Remember 6 months over 12 months because the new equipment was bought on 31st August. The number of months from 31st August until 28th February is 6. Okay, so we're going to work that out and get our answer of 16,800. Okay, so we can put in this for depreciation for equipment. Okay, so depreciation for equipment. We are also doing a depreciation ledger account, so I'm just going to put it in there at one time. Okay, depreciation ledger account. Okay, on the debit side, we're going to say accumulated depreciation of equipment. Our folio is GJ and the date is 28th February. Okay, while I am here, I noticed that there was an accumulated depreciation on equipment account, which we also need to do. Remember, accumulated depreciation is a negative asset, so we bring down the balance on the credit side, which was given to us as 42,000. And the depreciation we just calculated now, remember the journal entry is debit depreciation, credit accumulated depreciation, but 16,800 will also go to the credit side. Okay. I'm not going to balance this account. You can do that on your own if you like to. Okay, going back to the number 3, we now can work out our movements. Now movements will be additions minus disposals minus depreciation. There were no disposals for equipment, so it will just be 40,000 minus 16,800. Okay. The next thing is to work out the carrying value at the end of the year. So for carrying value at the end of the year, we're going to take carrying value at the beginning of the year, 92,000. I'm just going to highlight it here for you. 92,000 plus or minus your movements. In this case, it's plus to give us our answer of 23. To give us our answer here, carrying value at the end of the year. To get the cost at the end of the year, we're going to start with the cost at the beginning of the year. Okay, to that we're going to add on any additions we have, and that will give us our cost at the end of the year. Okay, now remember for equipment, nothing has been sold, so it's more straightforward, right? Accumulated depreciation will be your accumulated depreciation at the beginning of the year plus your depreciation for the year, and that will give you accumulated depreciation at the end of the year. Remember, in note C, you can always check if your note is balancing. So you'll say 174,000 minus 58,800 to give you 115,200 as your carrying value at the end of the year. Okay, so we've basically done with equipment, and now we just have to deal with vehicles. With vehicles, we've got asset disposal. I have put up a note here on this tab with the 6 steps for asset disposal, so that you can use this note in order to do the asset disposal, right? We're just going to do it based quickly on the side here. The first step for asset disposal is to calculate the depreciation up until the date of sale on the sold asset only. Okay, so the cost price of this vehicle is 90,000. The depreciation method is 20% on cost. The asset was sold on 31st December. You need to count the number of months, basically from 1st of March, the beginning of the year, until 31st December. That is 10 months. So we're going to calculate it. We're going to say 90,000 times 20% times 10 over 12. Okay. and you can calculate your answer for that. Okay, so you get 15,000. Our journal entry is debit depreciation, credit accumulated depreciation on equipment. So go to your ledger accounts, okay, accumulated depreciation on vehicles. We can bring down the balance from the question first. Okay, and then we're going to say debit depreciation, credit accumulated depreciation on the day the asset was sold. Okay, and that was 15,000. So we credited accumulated depreciation. I'm going to debit depreciation with the same amount, 15,000, and on this date, December 31st. So remember, depreciation is normally calculated at the end of the year, but because this asset was sold during the year, it would have to be calculated on that date. Okay, if you would like to, and you can put a note on the side here that this is the depreciation on the sold asset. So in a nutshell, yeah. Okay, sold. Okay, let's go back. Okay, the next step of the asset disposal is the cost price. Okay, so the cost price of this asset is 90,000. Okay, now with this 90,000, if we are doing a ledger account, we go to the asset disposal ledger account, okay, and we put it onto the debit side. Okay, the reason it's on the debit side, okay, I'll tell you why now. Okay, we're going to put this on the debit side on 31st December. The reason it's on the debit side here is because in its own account vehicles, it needs to be on the credit side. Okay, the reason being that when an asset is sold, the asset vehicles decreases. Okay, we also need to bring down the balance for vehicles here. Okay, this was given to you in the question, 390,000, right? Okay, so we've got 90,000 on the credit side of vehicles and on the debit side of asset disposal. Mostly you concerned about note 3. So in note 3, remember, we always do our disposal on the side so we can get that information. We're going to put your cost price, 90,000. Okay, the next step of the asset disposal is to calculate the accumulated depreciation. Now, accumulated depreciation, you must remember, is accumulated depreciation at the beginning of the year. Sometimes given to you in the question, and other times you may have to calculate it. So the accumulated depreciation given to us on 28 February 20.2, which is the end of last year, was 36,000. Okay, and then in step 1 we calculated 15,000. So we're going to add that. Because remember, depreciation, accumulated depreciation, is your depreciation added up over the years. Okay, so we're going to have 36,000 plus 15,000, it's 51,000. Now this is the step where many people go wrong, so you must make sure that you get this right. Okay, so it's the accumulated depreciation given to you in the question from the previous years plus your answer from step 1. Okay, so 51,000. Let's go to the ledger accounts. Okay, so in the asset disposal account, accumulated depreciation goes to the credit side. Okay, so that would be here 51,000. So that in the accumulated depreciation on vehicles account, it can be on the debit side. The reason is when you sell an asset, the accumulated depreciation decreases. So normally accumulated depreciation is recorded on the credit side, but because this asset is sold, we're removing it from the books. It is therefore recorded on the debit side. Okay, and the accumulated depreciation is something that we also keep on the side of our note 3. The reason is we need it in order to calculate the disposals at carrying value that we require for note 3. Disposals at carrying value will be 90,000 minus 51,000, and you must put your answer in brackets, so that's 39,000. Okay, then the next step is to record the selling price. So how much did we get for this asset when we sold it? Okay, it was sold on credit for 51,750. 51,750. It was sold on credit. Remember, it can't be sold to a creditor. It's sold to a debtor. So the journal entry would be debit debtors control and credit asset disposal. So on the credit side of asset disposal, we're going to have debtors control with 51,750. Okay, let's go back to note 3. Okay, the next step is to calculate the profit or the loss. Now, if I look at my note 3, I've calculated the carrying value to be 39,000. Okay, but this but we sold it for 51,750. So we've obviously made a profit. The reason we made a profit is because the selling price is greater than the carrying value. Okay, because our selling price is greater than the carrying value. Okay, and your calculation would be 51750 minus 39,000. So let's just work that out. Okay, so 12,750 is our profit. This is one way of calculating the profit. Another way of calculating it is doing it in the asset disposal account. So if you look at this asset disposal account, the credit side definitely looks bigger. So we're going to put that answer in on both sides. We can then work out the difference, and you'll see we get the same answer, 12,750, and then we call that profit on sale of asset. Now the reason you know that it's a profit if you're doing a ledger account is because it arrives on the debit side here. That means in its own account, which is profit on sale of asset, it would be on the credit side. And because it's an income, it is on the credit side. Okay, so this would come from asset disposal. Oh, sorry, the question doesn't ask you for this ledger account, but I'm just showing it to you anyway. Remember, this would go to the income statement as other operating income. Right? So if you're doing financial statements, it would go to the income statement. Right? Okay, let's go back.